convene. Thank you for joining us today for our lunch presentation of sales tax myths and legends. Do you have difficulty determining which of your purchases are taxed or exempt from sales tax? And do you find it time-consuming and burdensome for your business? Were you advised to pay sales tax on your purchases, or that filing a refund claim would trigger an audit? Today we'll debunk some of these popular myths and legends about sales tax and share with you some helpful insights. I'm Carolyn Powell, Business Development Director here at Tronconi, Seguier & Associates, and I'll be your host today. There's a couple different ways you can engage with us. Just to let you know, at the toolbar on the right-hand side of your screen, there is a question section. If you have any questions throughout the presentation, just put it in there and we'll get it answered for you. Also, too, there is handouts that includes a copy of today's presentation and also a bio of our speakers and experts today. After the webinar, you will receive a survey asking how it was, if it was helpful for you today. Feel free to give us any feedback, submit any questions that you have. And if you'd like to set up a time to talk with Tom or Gerad directly and any specific questions that you have. After the webinar this afternoon, I will also send you an email with a copy of the presentation and the recorded version if you want to go back to it, just so you know. So without further ado, let's get started. Tronconi, Seguier & Associates is a certified public accounting and business consulting firm. Our two experts today are Tom and Gerad, and they'll be leading us through this presentation. Tom has over 20 years experience in public accounting and is a CPA. He has a broad range of industry experience in manufacturing, food, financial services, software, environmental remediation, and electronic commerce. Gerad also has over 20 years of experience in public accounting and private industry. He was a former employee of the New York State Department of Tax and Finance for over 6 years and has worked also in a broad range of industries, including the food industry, government, and IT. So I'm going to hand it over to Gerad to get us started today.
Hey, welcome everyone. Thanks for joining us. Today, Tom and I are going to focus on 4 key areas in sales tax. So we're going to revisit some common exemptions that we've talked about in previous webinars. We're going to discuss some exemptions that not every business is, taking advantage of. And then we're going to focus on some services which are generally not taxable, and in which of these you may need to provide a certificate to your vendor or contractor to avail yourself of the exemption. Sales tax overpayments. We're going to talk a little bit about when and how to file, a general overview of when we file for clients and they either need extra help or they don't have a sales tax team in-house. And then one of the things that we'll talk about, does the refund actually trigger an audit? Filing returns, we're going to share a client study where we helped them reduce the amount of time they spent on returns and focus a little bit more on running their business. And then the last area, drop shipments. Tom will walk you through what a drop shipment looks like and how states may tax this type of transaction. What's different with Wayfair. And last but not least, whether you should register in a state and start filing returns so you can claim a sale for resale exemption. Carolyn, let's go ahead and get started with a polling question.
Sounds perfect. All right, so our first question is, should your business pay sales tax on all of its purchases? I'm starting to get some responses in.
It's a good question, Gerad. I think the topics today are good. I think we've heard a lot from our clients about these issues, whether it's exemptions and, well, what do I do if I pay too much, or overpayments, along with the filing returns, and drop shipments have just gotten even more complicated the last few years. So I think this is a good, diverse topics for today that a lot of people benefit from.
All right, we've got about almost 80% voted, so still voting on this. Obviously, people are giving it some thought. All right, I'm going to close it out to keep us moving. And so 83% said no, and a couple aren't sure. So this will be a good topic today and get this answered for those that are unsure.
Yeah, I think that's a great response right there,
Yeah.
83%. Glad nobody said yes. Because, you know, not never yes, like, yeah, but no and maybe are good. I mean, no, you definitely should not pay tax on all your business purchases. There's a lot of issues, and you know, we always like to say with sales tax, it's never black and white. It's just various shades of gray as to what's taxable and what's exempt. But in talking about exemptions, there's two really common themes we can talk about when it comes to whether you purchase tangible personal property and when you purchase services. When you purchase tangible personal property, it's typically subject to sales tax unless an exemption applies. Some things are excluded from the tax law. And when it's excluded, that means everyone benefits from it being non-taxable. Just think of food. When you go to the grocery store, you don't have to provide an exemption certificate because food is excluded from tax in New York State. And I'll use New York State as an example in a lot of these cases. There are other states that treat things differently. Now, some things with tangible personal property are taxable, but they're only exempt if you provide some type of form or certificate to the vendor, to the seller of these products. So we've listed here some general exemptions. So the ones on the left are a little bit more commonplace than some on the right here. And typically speaking, one of the most common that we see most states have, and we have New York, PA, New Jersey, Massachusetts, and Virginia listed as manufacturing. You know, if you're purchasing machinery and equipment for your business that's going to be used to produce tangible personal property for sale, then typically that equipment is exempt from sales tax. In New York, you have to provide a form, an ST-121 exempt use certificate, in order to, you know, avail yourself of that exemption. And it's a broad exemption, right? In New York State, everybody knows who's a manufacturer. It not only includes machinery and equipment, but your supplies, tools, parts, and then there's pollution control. There's safety equipment for employees working on the production line. And then you have the offshoots of that exemption, including packaging materials for items that are going to be sent to your customer. You know, research and development, kind of an offshoot of the production exemption of manufacturing, but at the same time, you don't have to be a manufacturer. You could just be doing R&D work. If you're developing a new product, you're working to improve an existing product or advance something in a field of technology or science, that's enough to, you know, qualify for the R&D exemption in New York State, which, you know, also includes your equipment and materials and whatnot. But the key difference is with R&D is that you do not get an exemption on installation, repair, or maintenance services. If it's a production exemption, if it's manufacturing, you do get those services included, but not for R&D. Don't know why, Gerad. It's really confusing because back, what was it, up until, oh my God, I'm dating myself here, but like 2000, no, not even 2000, when
Right around 2000.
the exemption, yeah. Because it used to be you had to pay the local piece of sales tax on the installation or repair of production machinery. Yeah, God, I've been doing this way too long.
Yeah, and one of the things we've helped other clients is to point out is on manufacturing R&D is that you don't actually have to be the company who's selling the product in order to qualify for the exemption. So you hear this concept of like being the contract or like the CRO if you're a contract research and development or like contract manufacturing. So that's something just to keep in mind is, you know, that exemption may extend over to a subcontractor who's part of the process.
Mm-hmm. And the one thing I did forget to mention too with manufacturing and R&D is utilities as well. If you're using electricity or natural gas or propane or some form of, you know, utility like that in your production process, that electricity, that gas also qualifies for exemption. Have to do a little bit more work with that one because, you know, as opposed to being a predominant use test as it is for the equipment, where you only have to show it's greater than 50% used in production. With the utilities, you have to show exclusivity. You have to really show which equipment is using it and which isn't. So, you know, we've worked with engineers in the past to help our clients determine that. And it's really something a lot of people miss that they should, you know, really look into. So you could be saving a lot of money. Electricity and natural gas is not cheap these days. So whether you're buying it from an ESCO or you're buying it from the NYSEGs, National Fuels, Niagara Mohawks, there are exemptions for manufacturers and R&D.
We did a webinar on that, so I can share with everybody the
Yeah.
link to that one if they missed it.
We also did the webinar last year in March, I think, on manufacturing exemptions too. So they're on our YouTube page, right? Okay.
Absolutely.
Our channel.
Yep.
Okay. Yeah, and then some of these other exemptions can be very specific, whether you're buying a tractor trailer, if you're buying tractor trailers that are going to be used in combination with a gross vehicle weight of over 26,000 pounds, those are exempt, including all the installation, repair, and maintenance services. Farmers benefit from a very broad, generous exemption in New York State. You know, whether it's machinery and equipment, supplies, vehicles, utilities, building materials. It's very, very generous for agricultural within the state. And really, the last one, direct mail, I want to touch on. You know, direct mail, if you're sending printed material to a printer that's going out in New York State, that printed material is exempt. If you're sending what you would consider printed promotional materials, not only is it exempt if it's going out of state, but also if it's being sent by US mail to New York customers, that direct mail, those printed promotional materials would also be exempt from sales tax. And New York State has different forms, whether it's the ST-121, there's an ST-121.1, I think that's for the tractor trailers. The ST-120 covers resales if you're buying inventory or product you're going to convert. That's going to be exempt. And then, you know, the uncommon ones on this page, whether it's a public works project, whether it's a construction for exempt orgs, you know, materials that a contractor's going to buy in those cases are going to be exempt from sales tax. You know, again, we have to use another form, an ST-120.1, for a contractor exempt purchase certificate. Some of the state incentive projects like IDAs, you know, there's specific guidance related to that. If you're working with an IDA, an industrial development agency, to buy materials, building materials or equipment tax-free. Sales tax holidays, we're not big on them here in New York.
Yeah, no, New York's not very.
But other states like, you know, Massachusetts, Maryland, a lot of the southern states have these. Alabama, Louisiana, Virginia. I think Ohio has one coming up. A lot of times they're right in early August. They're usually tied to back to school, where for a week or 10 days you can buy clothing, school supplies, computers even, those types of purchases tax-free for that time period. Always a pain for vendors and sellers.
And one thing in Massachusetts is interesting, actually, it's up to a certain dollar threshold, but they exempt all tangible personal property except for, you know, like meals that are subject to the meals tax.
Okay.
It's a pretty generous holiday period, but it's just something to be aware of. The challenge is these states wait to the last minute always to say, yeah, we're gonna do it again, we're gonna renew it. And then, you know, at the last hour, you've got to figure out the programming in your system to do it right.
I think somebody else was just talking about, I think Ohio's is gonna be a general sales tax holiday too coming up.
It's a blanket, it's
Yeah.
pretty much across the board.
Yeah.
New Jersey is probably a more recent one,
Mm-hmm.
but that's again, similar to Maryland and Virginia, where it's a back to school themed holiday.
Yep. Okay, hit the next slide. So we talked about tangible personal property and services, and this This kind of falls kind of in the middle with a lot of computer software and digital products. Is it tangible personal property or is it a service? It's kind of a hybrid. It's kind of in between. And when it comes to, like I said earlier, sales tax isn't really black and white. It's a lot of shades of gray. This is where it gets very gray. The states, a lot of the sales tax statute and authority was written years and years ago, before computers and software became an everyday part of our lives. So a lot of times what we have to do is we have to look at the statute, the regulations, the administrative guidance, and interpret how a state is going to handle or address the taxability of something. And it's not always up to date, right? Like on the software side, we see, software delivered electronically. That's been an evolution. It used to be you had to buy your software on a diskette, whether it was a 5 1/4 or 3.
Yeah, you are dating yourself.
I know, thanks, yeah. My kids look at me like, what are you talking about? Zip drives. I remember having a zip drive and thinking it was the coolest thing in the world. Then CDs and, DVDs, but now pretty much software, you download it electronically from a website, or you just go on a website and access it that way. It's software as a service. And, in some states, most states tax software delivered electronically. It's canned or pre-written software, like typically like think of it, your Microsoft products. Those are canned products, those are pre-written. Everybody uses the same, software there. There's no changes to it. But software as a service, the whole access electronically on a website versus download. Now, states haven't all addressed those types of services, whether it's software as a service, infrastructure, platform as a service, all these services now that you can purchase and access online. States haven't really addressed a lot of them. So I think about 20 states only tax the software as a service or application service provider. So you have to look at that when you're purchasing software for your business. Well, you got to ask that question: am I downloading it electronically or am I going out online? In New York, it doesn't matter. New York taxes it all software, no matter how you get it. But in other states, it could have a difference on whether you're paying tax or not.
Yeah, it's a good point, Tom, because it could be an advantage, and depending on which way you take possession of the software. A lot of the states, except if it's software as a service, it's now a service and not the sale of tangible personal property. So there's different tax treatment.
And then, it gets even more confusing because you're not typically buying software just for, if you're a big company and you have employees or even locations, in multiple states, you're buying one license typically, or your license agreement's going to your headquarters, and it's going to include 500 licenses of that software. Well, not everyone who's using that's in New York. So you might have people in other states that don't tax the software. So what do? We have MPUs, multiple points of use. Some states actually have an exemption certificate that allow you to break out where your users are so you can pay the correct amount of tax. Unfortunately, New York does not. So in a lot of cases, what we see for our customers is, especially those with locations across the country or even the world, they're paying New York sales tax on 1,000 licenses. Maybe there's only 100 people actually using it in New York. So then we have to go out and, let's help them get their refund back. How do you do that? So, very, very confusing with the technology. More on the uncommon side, software services. Typically most states, if you're installing software, you're providing implementation services, think of like an Oracle or an SAP, a big project like that. If you're providing consulting, programming assistance, training, as long as that's all separately stated on an invoice from the actual license of the software cost, all that's typically exempt. There's very few states that actually tax those types of services. Nobody taxes custom software. How much custom software do you even see these days?
It's pretty standard.
Yeah, if anything, it's customized. You buy a canned product, Like, well, I always go back to SAP and Oracle, the big ERPs. That software is canon. You buy that license. Everybody buys the same license for $100,000, and then you pay somebody $1 million to customize it for you, to do the implementation, to modify it to meet your situation. Digital photography, that falls into that digital product space. And in New York, digital products are still not taxable. I know the legislature tried to tax them in the last bill, but it didn't pass. But a lot of states, like 26 of them now, if not more, tax digital products. So data centers too, I mean, that's becoming a huge
That's a
thing.
huge thing, and your IT departments are always strapped for cash, and they're trying to reduce their spending. Have you ever thought about putting your data center in a different state? Or Amazon has data centers throughout the entire country, maybe, you house your equipment inside of one of their data centers where you could work out an arrangement where they maintain it for you. So you don't actually have to put it, maybe an employee in that state to run the risk of registering, but then you can take advantage of this exemption because you put millions of dollars into a data center, to maintain it and for your business. So again, these are new, they're catching on. Wisconsin just recently
Yep.
has an exemption for data centers. So something to keep in mind if you got that on the horizon.
Yep.
It might be an opportunity for you.
Mhm. And then on this last slide, I've talked too much on exemptions already, but, the services that, like we said, services are typically exempt from tax unless they're enumerated or specifically listed in the tax law. And the big thing here in New York and some of these other states, construction, right? Whether in New York is something a capital improvement, which is exempt from tax, you're not being charged tax on a capital improvement versus a repair or maintenance of real property or the installation of tangible personal property, which is typically exempt from tax. Your professional services are usually exempt. Separately stated labor is typically exempt. Third-party transportation, if you're using a UPS, a FedEx, anybody like that, those types of services, those hauling services as well are exempt from sales tax. One of the more uncommon ones, self-paced learnings, is a new, because what was it? Was it software or was it,
Yeah, this is a more recent change, in New York, and New York took an aggressive stance in the past few years ago and said, you're actually buying software because it's pre-recorded training. And many companies were paying tax on that. You'd have purchase of a skill software, if you're a multi-state business, you're spending $500,000 on those licenses to train all your people. I mean, you rack up 30,000, 40,000 sales tax. Now, the states revisited that type of purchase, and they changed their mind and said, what, we actually think it's pre-recorded training, which ends up being a non-taxable service. So something new, just something to share with you folks, to let you know that things do change, not always in our favor.
Mm-hmm.
But this is one that if you have, again, it's kind of like in the past it's treated like software, but now it's a non-taxable service. So if you've been paying tax on that, there's opportunities for refunds there.
Yeah, because not all vendors of those services may have.
Actually charge tax.
Or they're still charging tax, you never know, right?
Yeah, when I was working in the industry, I know we were self-assessing use tax on some purchases, or there were certain vendors that were treating it as a taxable sales software.
Okay. All right, let's talk to him, Gerad.
All right, then that means it's time for another poll. So let's see what our next poll question is. Will I be audited in my business if my business files a refund claim? Let's see where this one comes
Gerad, I've
in.
heard that question a lot.
Yeah, so have I. It's it's one of those things where it's, what card do you play with the state sometimes, because certainly the states, when I was working at the state, we used to think of people filing refund claim to date. that they look and see if they've underpaid.
Mm-hmm.
I think that's where a lot of businesses are concerned about filing refund claims. Because again, it could trigger an audit, and, we're seeing the polling come in with, a lot of, folks saying maybe. There's always a possibility, right, based on the size of the claim, that it could trigger an audit, especially if you're a larger business.
I think it depends on the state.
That's too. Yeah.
Like, I mean, I think historically here in New York, I don't know if I've ever seen a refund claim necessarily trigger an audit. I can't think of anything. I've been doing this, as we said, a long time. Other states, though, 100%, I would say a refund claim can trigger an audit. I think we've had that happen in Iowa, maybe even Pennsylvania. So, yeah, I mean, New York, I think, is so segregated with the refund unit versus the audit division that a lot of times they're not really communicating. But some of these smaller states, you bet, if you're asking for a chunk of change back, they're going to come back to see if they can offset it.
And you bring up a good point. New York, they're so disjointed that they don't talk to each other.
Mm-hmm.
So oftentimes you submit a claim, it goes to desk audit. And if it has all of the right documentation with it, it's generally approved with, minimal back and forth
Mhm.
between the auditor and the preparer. So
On the screen, I did put the results, so we had 65% say maybe. Third, the group said no, so generally where everybody is at.
That's a good answer.
Right, we have no yeses and no, I don't know, so. All right, moving on.
all right, so let's talk a little bit about how to file a sales tax. So there's many ways you can do this. And we'll talk a lot about New York, but a lot of the other states are similar. There's different ways you can do it, and sometimes it may depend on the size of the claim or the number of issues that you have. But it's pretty common in New York to file a separate claim. There's a form that New York has, it's called an AU11. It's an application for refund. It's generally pretty straightforward in the sense where you have to provide business information, you have to provide an explanation of why you're requesting the refund. And then one of the things the state often looks for is documentation to support the claim. So that could be, it could be general business records, but many times it's going to be invoices,
Mm-hmm.
on purchases where you've overpaid the sales tax, you've identified why you've overpaid it, what's the basis for exemption. The state's going to be looking for all of that to have a complete, what they call a processable claim,
Yeah.
something that they'll actually prove. And
What about the proof of payment? What would they look for that to show that I may have paid that sales tax?
so oftentimes you're going to have like a copy of a check request or the actual check itself.
Yeah.
You're going to have to provide. Pennsylvania is a real stickler on that. If you don't provide that information, they will not approve your refund claim. So in our experience, I've submitted a few claims, and I know Tom has as well in Pennsylvania. That's just one of the things that they look for. The nice thing is they don't look for all of them.
Yeah,
So-
they usually take a sample.
Yeah, it's a sample, but a lot of places, if you haven't experienced it before, you might end up pulling all of that and tying up your resources.
Mm-hmm.
But if you wait until you actually submit the claim. it's
Well,
only-
and the thing too is a lot of people pay electronically now too.
and that makes
So there is no physical canceled check. You've got to get some kind of proof in your system that that was paid. And then if you're paying multiple invoices on one check or one wire, you got to show all the invoices that were on there as well, so they can see that those amounts add up. So thankfully, in most cases, they only will take a sample, but it's still, it can be a real task sometimes, depending on where your records are to get all that stuff put together.
And I've seen a lot of clients or companies that I've worked with, that the data is getting better, which makes it a little bit easier to pull some information. And the states are starting to look at the data versus the invoices themselves, but they still want a sampling of sorts. So, yeah, so certainly that's one way to file a claim. Another way to do it is in New York is, what's interesting with AU11 is you can actually file it in part with your current filing, or you can amend a return. Now, there's pluses and minuses to amending a return. And often it's overlooked that when you amend a return, you start the statute all over again. Depending on, your business and what other issues you might have in that period, you may think about whether that's the best approach, for filing for a refund, or do you want to submit a separate claim and leave your returns as filed? So we talk through that a lot, oftentimes with our clients, just to see, like what's the best approach. One of the other ways to do it, and especially in Massachusetts or Virginia, is it would like you to, but it isn't always the best way to do it, is go back to the vendor. So, and think, well, why would the state want you to do that? The reason being is they don't want you to double dip. So if you go back and you get the credit from the vendor where they've collected the tax, they're going to give you the credit, they'll take the credit in return, they'll file for the refund. This way, the state kind of protects themselves from, in theory, of buying the transactions and stuff and almost paying the claim twice. One of the other things we talk about sometimes too is just, like, do you have multiple issues or overpayments that deal with multiple issues where maybe one is straightforward, the other one's a little bit, like Tom was mentioning earlier, is more gray. It's not as clear whether you're entitled to a refund, but you want to submit a claim. Is if you bifurcate the claim, split it apart, and put the clean issue under one claim and the stuff under another, or sometimes for ease of processing, you might get your refund and your money back faster. We touched a little bit on, like what documentation is required. Generally, it's purchase activity from your general ledger or spreadsheets that you might have that show your use tax accruals from month over month. If you're a taxpayer who's getting a lot of use tax accruals, invoices is really key. You're going to see that often. One of the other things that we've been doing of late is going out, thanks to Google and the power of the web, is we can get a lot of vendor information. We can learn about, certain parts, like what they're actually buying.
Well, and that's a great point, because a lot of times an invoice is going to say we bought 10 HDX-344s. And if there's no PO or there's no other information, you got to provide something to the state. How do they know what that is? Mm-hmm. So like you said, Gerad, going out to Google and, typing this stuff in and finding these vendor websites and even getting a picture of it or the description is essential on a lot of these refund claims.
You hear people talk about a picture is worth 1,000 words. Mm-hmm. I mean, I've had times where the auditor just won't hear what we're saying. We show a picture and they're like, oh, I see it. Because, some people are visual, right? And that's how they learn. And so it's, it's some back and forth, but those are the types of things that they'd be looking for. One of the things we're starting to see is more and more where the auditors aren't coming on site. So we've got to send the information to them electronically, which for us, we appreciate because, as a firm, we do a lot of, we capture a lot of the information electronically, and then we'll send it to the auditors. And we have ways of linking information like documents and stuff to spreadsheets that really makes the claim much more efficient. It can be processed by the auditor, reviewed quicker, and hopefully the turnaround is much faster. So we're seeing a lot more of that. And we've heard comments from the auditors where they really appreciate that. So they don't have to dig in and try to connect the dots. We do that for them. So
a lot easier than the old days where it was like binders of invoices that you had to make sure they were all sorted in the same way as the refund schedule. Now we just link it right in and put it on a USB drive, and that's that.
I'm sure everyone is experienced where your files come back in whatever you might want to call it. It's disorganized. They've rearranged it for you, and it's not necessarily the way you're looking for the information to come back. But sometimes you don't see that as much anymore with the electronic records, which is nice. And then there's always the question, right, with overpayments, do you have the right resources to file the claim? It's a burden, right, to put these claims together. It takes, like Tom said, it takes a lot of time to get all the documentation that you need. But certainly with sales tax, volume of purchases you might make, particular vendors, it adds up over time. So it's something that certainly can help your business's bottom line if you've overpaid and try to get these dollars back. Slide. So the refund claim process, what we wanted to talk a little bit about is just give you a feel for how that works with some of our clients. We've helped them in the past. So, maybe with that, like we said, you don't have enough resources and you say, where do I get help? Our firm, we've helped, a lot of clients, work through and obtain refunds that, are helpful to their business, where they've overpaid in the past. And we'll talk a little bit about like how do you do that, right? So today, because of robust systems like SAP, Microsoft Dynamics, you're able to extract the purchase data from your general ledger system or ERP system, and it's a really good starting point for us to put together a claim that can help you minimize the amount of information you have to pull from your system. Because when you're looking at the purchase data, it has account information, it has cost centers, it has project information, and we use all of that to make decisions on whether maybe you should have or shouldn't have paid tax. Short of the data, if we can't make a decision, and we go back to the way we used to do it, right? We'd start with invoices. We say pull all of your invoices out of a filing cabinet, which these days we've forgotten that that's how it used to work, and it was much more cumbersome than it is today. And then even we're finding too is these systems, they store your purchase invoices, so you don't have to look at hard copies anymore, which is a bonus for us. I had past experience with a company, they used to put like the cost center information or comments like on their invoices, so you can actually see that too. To your point about what are they actually buying, and sometimes you just can't tell from an invoice. So and then after the purchases, there's always that we do that outside research where we go out and look at the web. We might actually call the vendor. We might sit down with your employees and say, where we do a tour of your facility to figure out, just exactly how does your process work. And sometimes, you could have quality control equipment, for example, that's in process versus at the end of the process, and the tax treatment's different. And we learn that from just hearing and listening to your folks tell us what they're passionate about, right? That's their business. So then there's, once we have all that information together, we pull it all into a refund summary. It's a schedule, we create that, kind of ties everything together. We might hyperlink in images, for the auditors, but it makes it very smooth and easy for the auditors to review the information. And then there's always that know or go, right at the end. You do all this work and you say, sometimes the clients say, I don't want to file a refund claim. And they might have good reason, or we might have to, encourage them to file a refund claim for whatever it might be. And sometimes doing nothing might be is maybe you didn't pay any use tax for the last couple of years.
That's something too. Typically I've always had in my experience when I've been doing a refund claim and looking at invoices, I'm not specifically maybe looking for deficiencies or underpayments, but sometimes they're very glaring. And if you see that, we didn't pay tax on this or that, it's like, oh boy, if we do file this refund claim and by chance we do get audited, what's our risk here? What's our risk benefit here of filing the refund claim? Because we're just going to be giving it all back. Or do we have to go back and amend the returns? You want to balance all that, and explain all that to the clients. They know what the no decision is on something like that.
Yeah, that's certainly something we evaluate as we're putting together a refund claim, is making sure the client understands, how much risk, right? Is it a gray issue? Is it something that's been maybe litigated before? Or is it something we're pursuing for the first time? And past that, there's other there's other ways, like if we're uncertain on something, there's different avenues we can pursue.
Yeah.
Clients.
And it's unfortunate, because sometimes, like New York, it's pretty cut and dry. If you're filing a refund claim with the refund unit, it might take a little time, but you're gonna get your answers back. They're gonna decide in one way. Sometimes other states, like Pennsylvania, you've got the Board of Appeals where you file a refund claim to, and pretty much typically, they're gonna deny it. And then you have to kick it up to the next level of Board of Finance and Revenue, and it's just the game you have to play sometimes in a state like that. But that's what I think, we can offer some benefit in helping a client, especially if they believe that there's refunds out there, overpayments, and they don't have the staff, you gotta focus on other things. You gotta focus on running the business too, and doing your day-to-day tax and accounting functions. And sometimes there's, no time or resources for a special project like this, even though it could bring some dollars back to the company.
Okay, all right, so let's talk a little bit about filing some returns. So we have a customer story I want to talk a little bit about here, but before we do that, I want to ask Tom a question. He's going to talk a little bit about whether this next statement is true. So, Tom, I was told Excel is the only tool available to compile sales tax returns. Is that true?
No, Gerad, it is not true. There are multiple packages, whether it's data analytics tools like Alteryx that are out there. There is other products like Avalara, TaxJar, that offer online solutions for companies that bridge from their ERP system or their QuickBooks or whatever, that help compile your sales tax in different states, especially if you're an internet, reseller. There's something that's very beneficial to them. There's plenty of packages out there, including the next one, I think, on this polling question.
The polling question on this.
All right, our next polling question. Are you familiar with or have you heard of Vertex indirect tax returns? Let's see what this one comes in at. Or we have a lot of no's, so interesting. But I have a feeling you guys will help them understand what that is. Give everybody just another couple seconds to fill it out. All right, I'm going to close it out.
So it looks like the majority of the folks have not heard about Vertex. Okay, so we talked about the client story here in a second. We'll share a little bit about what that is.
Mhm.
So Tom mentioned, real quick, products like Avalara, Alteryx. Well, Alteryx is like a data aggregator. Avalara is a third-party tax return software, much like Vertex. So Vertex is, I would say, probably one of the leaders in the industry. Avalara is not far behind them. So not only do they have what they call tax engine software, they have a tax returns package as well, where you can use that software to prepare tax returns. So rather than aggregate the data in Excel, you can use, if your data is in a good place, you can use Vertex to do that. So much more efficient. We're coming to a place in time where we'll eventually be able to submit returns directly from Vertex. The technology is coming. It's not complete yet, but it gives you can think of like how you submit your return with TurboTax. That's the market starting to head that direction. So, so let's talk a little bit about some work we had done for a client. To give you an idea, is Vertex or Avalara or Alteryx something that might help your business? So for this client, the opportunity was they wanted to reduce the processing time from 8 to 2 days. And this client was operating 100 plus stores in 10 states. Now, real quick, before we go on to the solutions, this is just an example, but we'll talk about later on how we have other clients that are smaller. They don't have as many locations, but they still benefit from the Vertex system. So the solutions for this client is we could do business as usual and hire more staff. But certainly the CFO was concerned about that, right? It's more cost to the bottom line. You could purchase the Vertex software and prepare the returns in-house, or outsource the returns to a CPA firm who uses Vertex return software. Carol, can you go to the next slide? So this client decided that they wanted to outsource the returns to TSA. So that's Tronconi Segura. We do the returns for this client. And what that did for the client by us filing the returns is, you saw the other two options before. It was more costly, right, to hire more staff. And believe it or not, it was more costly to actually purchase the software, maintain it in-house, and still tie up our staff's time. But that staff needed to be, and for this client, needed to be refocused to another tax area. So we weren't going to be able to do that. So what were the benefits, right, to partnering with TSA? Well, TSA works closely with Vertex to prepare returns. And not only what that was beneficial to the company, but what it did is it helped free up that resource to do payroll tax compliance. It eliminated these spreadsheets that were used to summarize the data. Now, you might think Excel is a good fit. It's not always the best fit. And in this case, for every time a state was added, the client was adding the same number of spreadsheets for that state. So it's 10 plus for every state. You can see how that compounds and can get out of hand pretty quickly. And it wasn't super efficient. And then, we actually cut down the processing time by over 50%. The folks that are spending time on processing returns. The nice thing about that is we refocus their time, to Tom's point, running the business, which is, growing sales and the like. The other benefit of outsourcing the returns was the client did not have to maintain the software. So by licensing the software, you got to maintain it. And if it's not a cloud version, you might have to do that with your own data center. And then one of the other benefits to this process is we're able to get the sales tax reconciliation. You're talking roughly $15 to $20 million in sales tax collections. The sales tax rec was less than 2 hours every month, which we all know, when you get to be a company that size, reconciling the sales tax account is not always the most inviting task. So there are a lot of benefits for this client. And the last thing to say about is if you're interested in understanding more about Vertex, certainly reach out to us afterwards. But we just wanted to share with you is that, and Tom will touch on the next slide, is some of the other types of businesses that we're filing returns for.
Yeah, it's not, just so people out there know, we file a lot of returns for a lot of businesses, and they're not always very large retailers with, hundreds of locations. I mean, typically, we do a lot of work for e-commerce retailers, people who are just solely selling product online, whether it's off of their own website that might be powered by like a Shopify, or they're selling on a marketplace like Amazon or Walmart or eBay. We do a lot of work for those types of companies, and some of them, depending on where they have nexus, we might be filing in a handful of states or 35 states and another 50 localities in Colorado, if that's the case. So we do a lot of that work. We'll help our clients who are manufacturers with their returns, software providers with all the issues they have with whether their product is subject to tax or not in these states. As Gerad said, retailers, hotel operators, we do a number of just one-off, New York filings only for people. So don't think you need to be a huge company to get help with your sales tax. I mean, we can provide that assistance, and it's helping with not only the filing of those returns, but determining nexus issues that we'll talk about. Whether you need to register, helping with the registration forms, the notices. I think, Gerad, we talked about this on a prior webinar earlier this year. There's all the stuff that comes with complying with sales tax. I mean, it's something you can get assistance with. We're happy to help you with it or talk to you about. So how reliable is your data? It's a really good question. I think that's essential before you do anything, before you try to file a sales tax return, before you try to do an refund claim. The old adage of, I think it shows it here, is garbage in equals garbage out. The first thing I always say is, okay, great, we've got this data. What does it reconcile to? Can I tie it back to financial statements? Can I tie it back to tax returns? Because that's what a lot of cases an auditor is going to want to do. They're going to want to see that, the data we're providing, for sales during an audit is going to tie back to the income tax return, the federal or state income tax return. And sometimes it's not easy to do, depending on the time periods and year ends and whatnot. So you really need to focus on that. I mean, what are we including? Are we including all the accounts? Are there journal entries in here, that are adding up to other things? I mean, there's a lot to think about with data. Gerad, do you have any?
Probably the one thing I would add is, where do you want to spend your time? Do you want to spend fixing it in Excel, or do you want to spend your effort up front?
Mm-hmm.
And if you spend it up front and get your data cleaned up, then there's opportunity to take that data. Not that you can't do it by cleaning up in Excel and still loading it in Vertex,
Mm-hmm.
but once you have that, then you can spend your time doing all these other things like refund claims and stuff that really drives, cash and value for the business. So, with that said, we'll move on to the last section. We'll talk a few minutes here that's left on.
Let's talk about the drop shipments. Always a complex issue, third-party sales and stuff like that. And a typical drop shipment is where, let's say you're a retailer based here in New York, right? And you have a customer that orders a product from you, and that customer's in California. You don't necessarily have that product in stock. Maybe you're just a retailer, you're not even carrying that inventory. You contact a wholesaler or a manufacturer that's based in Florida, and then you ask them to buy that product for them and ask them to ship that product directly to your customer in California. So 3 parties, 2 different sales, and you have shipment coming from somebody that's not the seller to the customer in California. So obviously the transaction between, you and your customer, that might be subject to sales tax. And up until June of 2018, prior to Wayfair, Supreme Court case, you didn't have physical presence in California. You didn't have to charge sales tax. That's all changed with Wayfair now. Now, because of the Wayfair decision, you have, if your sales in California exceed $500,000 on an annual basis, and that threshold is different depending on the state, you may have to register and charge California sales tax, even if you've never set foot in that state. You have nothing to do with that state. You don't have salespeople in that state. So that decision right there is very difficult. And then you also have the transaction between you and that wholesaler. Okay, well, just provide a resale certificate. Okay, well, what resale certificate you got to provide in this case, right?
That's just it.
I've got 3 different states. Who's this guy going? Whose resale certificate is he going to take? And I think that kind of rolls us into this.
Our last question of the day before we wrap up. So exactly that question, which exemption certificate should I provide the drop shipper? And let's see where people come in. We have just a couple minutes left. We should end generally right at 1 o'clock, just for those that if anybody needs to jump off or can stay on for a little bit. Also, too, if you have any questions along the way in the presentation, don't forget there is the question section in that toolbar if you want to submit a question to Tom or Gerad. We're getting a couple different answers coming in. We'll give everybody just a couple more
It's
seconds.
pretty good
Stand time.
dispersion.
All right, I'm gonna cut it off just to keep us moving along, but I'll share the results. And we have a couple different answers here. So 47% said the New York State certificate, 14% California, and 28% is not sure. So what is the answer?
Jared?
So the answer is California. And so what's important is, and also is interesting, is ordered in some states, and we'll talk a little bit on here on the next slide, is that with California, you actually have to be registered in order to issue their resale certificate. Not every state is like that. Like New York, for example, you can use their certificate. They require you to use their certificate, but you don't have to be registered.
Mm-hmm. There's that section, I think, in the middle of the ST 120 that says if you're out of state, you're not registered. Okay, that's fine.
But think about what you're filling out and
Exactly.
it
I
might
mean,
trigger.
this could be good prior to Wayfair, but I mean, are you really not required to be registered? I mean, New York, California have very high thresholds of $500,000 of sales for economic nexus. But if you have a state with $100,000 of sales or 200 transaction threshold, you may be required to register, and that's something you really need to think about before you fill out your home state certificate or use that other certificate in some of these cases.
Yeah, and just to quickly touch on the last couple of slides, and really for informational, we didn't want to spend too much time today, is that there are states that they want you to fill out their form and only their form. How they're filled out may vary. Like I said, California is one way, New York's different. But that's something you want to be mindful of, is because in this scenario, if the California certificate wasn't provided and the Florida drop shipper is already registered to collect tax, they would be collecting tax from you. And then that's something your business might be on the hook for. So that's something to keep in mind. And then the next slide, many of the states have joined the sales tax streamline agreement. There's a certificate that makes it a little bit easier if you're doing a lot of business in these states, where you can use one certificate instead of having to fill out separate certificates for all these states. But just be careful, is you can just put your general federal EIN number in there, but is that the right number that needs to be on that form? Some states allow you to use your home state ID, or you may have to have the ID for the state where you're doing the actual delivery to. So again, keep that in mind. Tom talked about it before. Economic nexus is a curveball. It's something we got to be careful with these days. Are you offering up something where you're not registered but use that form? Does it tell you the state you're actually doing business there? The next certificate is the MTC certificate. Again, it's very similar to the SST certificate, but you'll notice that there's states that are not part of the streamline agreement that are now on this form, but there's a lot of footnotes.
It's like 5 pages of footnotes with the certificate that you really need to read through to determine if you can use it for resale purposes. And that's really it. It's for resale purposes. I've seen a lot of people try to use it as exemption certificates. I've seen people try to horseshoe other states on this form, or use something that looks like this form with different states on it. You have to be very specific, and it's only these states that are listed that will accept it in some format.
Yeah, and again, to go back to New York will not accept the certificate. You need to provide.
Yeah, New York will only take an ST1 form. They will not take anything else. So I think that's about it. We try to get back on track there. We like to talk about this stuff.
Just a little bit.
So much to it.
You guys will be back in October to continue the sales tax conversation and topics. So We can look forward to that. We are taking a break month of August on our webinars. We will be back in September talking more about nonprofits, and then we'll be back to the state and local tax topics in October. So join us then. Again, like I mentioned, you will receive a survey as soon as the webinar ends. If you could please complete that for us, give us some feedback. If there's topics, I'm starting to already plan for next year. So if there's a topic you're interested in, let us know. If you have follow-up questions, you can put that in there. Or if you'd like to set up a meeting or a phone call with Tom or Gerad directly, we can do that for you also. I will send you a copy of the recording today's presentation, and some of the other YouTube links that you can see some of our other webinars that we mentioned earlier today. Thank you for joining us, and we will see you again soon. Thank you, everybody.
Thank you. Have a good afternoon.